Hi guys, and welcome to my channel. If you are new here, in this channel we talk all things tax for individuals and small businesses. I try as much as I can to simplify tax terms. I also give some tips and tricks on how to navigate tax in South Africa. I don't know what's happening with the weather, so you will find that in this video I'm gonna be dark, then I'm gonna be light, and then I'm gonna be dark. Please forgive me about that, but I sure hope that it won't affect what I'm going to be saying, which is what I believe is most important. Okay, I'm going to be looking at my notes. So I always make notes when I do a video so I don't forget anything. So if I am looking down, then you should know that I'm looking at my notes. Okay, today what I want to talk about, tax season started in March. So tax season goes from March up until Feb. So it doesn't go like the normal year, like January to December. No, tax season starts from March and it ends in February. And then it always confuses people, tax season and submission season, if I can put it that way. The deadline for the submissions, it was normally July to November, and then last year all of a sudden they just changed it up on us and they were like, no, it's October in this year. So, and I'm talking about people who are non-provisional taxpayers, which is what most South Africans are, by the way. So otherwise, for provisional taxpayers, it's normally it closes end of January, which was the case last year. Now for this year, the taxes submission season is going to open in July, and then it will close. Oh well, the government will announce, but it normally opens in July, and then even the closing, it's in the past years it's always been November. Up until last year they changed it to October. So but now I'm talking about the tax year. The tax year starts from February up until it starts from March up until February. I hope that makes sense. So since now I'm gonna say it's still the start, because we've only started just in March. I just want to give some tips, and these are from tips that with the clients that I would help sometimes. It's just stuff that I've gathered, and I've noticed that, you know what, we can do better by doing these tips, or we can make tax season or tax much simpler for ourselves by doing these things. The first one is to actually update our personal details. I can't emphasize this enough. Very important, updating your personal details, because what happens, number one, if you change your address, if you change your telephone number, or you were married and then you get divorced, or you were divorced and you get married, what normally happens is, first of all, that marriage thing is very important, especially if you're married in community of property. I've done a whole video on its own about being married and tax. It makes a huge difference, so please go check it out. If I can, I will put it somewhere here so you can be able to click it. But being married in community of property and tax, like, there's a whole lot of things that you need to consider. But yeah, so if those things happen to you, like you were married and you now divorced, or you were divorced and now you're married, those are things that you need to update. Obviously the marriage one and whatever you will update when you're submitting your tax return, but that's something that's important for you to keep in mind. Now when it comes to your other details, like your cell phone number, your email, it's very important, because sometimes, and even your address, for whatever reason, there are situations, okay, it's improved a lot since COVID up until now, but then in the past there were situations whereby you find that SARS, for whatever reason, they don't email you, they don't call you, but they send communication via post, and you'll find that sometimes people will be like, but I never got it, and that's because you didn't update your residential address. So that is very important, guys. It is done on e-filing on what you call the Rev 01. You will let me know, let me know down in the details if you don't know what that is, or you want to do like a little simulation of it. But if you want to go and check it out now, SARS does it on their YouTube channel. SARS has a YouTube channel, by the way, guys, which I would urge you to check it out, because it's got a lot of a lot of important information, and they do simplify and show whatever most of the things that happen on e-filing, which I think would benefit you guys. Now I can't emphasize it enough. Update your banking even your banking details. Actually update your details, because also it's very sad when someone is desperate for their refund, and because they've been using banking details that they've since closed, or maybe they don't have access to, and now SARS is trying to pay the refund but they can't pay the refund. And what normally happens as well is, if you update your banking details now, for instance, it's not submission season now, so it's quite there isn't a lot of updates that are happening. It's so much better when you do it now, because SARS is not that busy, and so normally you would get help very quickly. But then if you now are trying to get a refund, it's submission season, everyone is trying to get their refund, everyone is trying to update their banking details, then it takes longer. So it helps that you update your details now, you check and you make sure that everything is updated. You change jobs, obviously there isn't much you can do about that, unless your changing of jobs accepts your changing your also affects your changing your residential area and whatnot, right? Very important. Number two, because of a lot of things that have changed in the past since COVID, very important, when at your work, sorry, my phone, when at your work you work, they allow you to work at home, right? And the amount of time that you spend working at home is more than 50% of your working hours, then you are eligible to deduct home office expenses. Now, one of the things that SARS asks for when you are submitting or you are trying to get a deduction for home office expenses is a letter from your employer. So as soon as at work they give you the go ahead, okay, fine, you can work home 3 days out of the 5 days and whatnot, you know, make sure, as long as it's 50%, as long as 50% is spent working, over 50% is spent working from home, make sure that your employer gives you the letter that is stating that sorry and so, and it must be addressed to you, not the general letter that all employees of can work home, blah blah blah. No. Try and go to HR and ask them to write and explain to them why you need the letter. Ask them to write a letter that's addressed to you with your name on. That's what SARS has been accepting in the past. So this is another thing that you need to do, because you want to do it again when it's submission season, because then I'm sure there's plenty of people that are going to your HR and they're trying to get this and that and whatnot, and HR is also under pressure because people's IRP 5s are this and that and whatever. So just try and get your ducks in a row right now. It will save you a lot of time and a lot of pain, and it will actually get your refund quicker. It will help you get your refund quicker if you're someone that has a refund, right? Okay, salary. Beginning of the year, normally January, people change jobs. In March, which is most companies, their tax years are also, or financial years also start from March. So people get their increases and whatnot. Make sure that when you get your increase letter, that when the amount of pay as you earn they're deducting from your pay slip coincides with the increase, because you'll find that sometimes for whatever reason you get an increase but they don't increase your pay as you earn, and you know what happens when that happens. You end up owing SARS. So you don't want that to happen. Make sure that when they increase your salary, they also increase your pay as you earn. Please, that's very, very important, because you don't want to be in a situation whereby you're owing SARS thousands of rands, because if that is the situation, you can be sure that they're going to come after you and they're going to want their money, and you can't go back, unfortunately, and be like, oh, but at work they didn't deduct the correct amount. No, it's your responsibility to check, unfortunately. So please do check that. It's very important. How do you check? Well, SARS every year releases what we call tax tables. Now, not to cause any confusion, right? There are tax tables whereby you will find them on the SARS website. Those tax tables, they basically have like individual tax tables, business tax tables. Basically, those tax tables, that the ones that I'm not talking about right now, they basically show that if you earn from this amount to this amount, this is how much tax you're going to be, this is the percentage tax that's going to be deducted for you. Those are not the tax tables I'm talking about. The tax tables I'm talking about, well, they're also referred to as payee tables. If you go to Google and say payee tables, they will pop up in PDF and you go and check. So basically they give you the exact amount that should be deducted from your income. They have a whole lot of list of incomes and they give you the exact amount that should be deducted. Now I want to warn you, when you are looking at that, please make sure that when you're calculating the amount that you supposed pay as you earn is supposed to be deducted from, include fringe benefits. And now you may be asking yourself, what are fringe benefits? First of all, I've done a video on fringe benefits. It's somewhere on the channel, so please check it out if you want more information. But fringe benefits are things like if you're given money, maybe you often travel outside of town, out of town from where you are working, then you're giving what we call subsistence allowance. It's basically for food, for travel, for accommodation sometimes. So that is a fringe benefit. In most cases, people are given a tiny bit more. Some are given like a whole lot more. So you find that your accommodation was 3,500 Rand, but then you were given 5,000 Rand for accommodation. So that difference is going to be what? Fringe benefit. But then during the time when it's given to you, the whole amount is counted as a fringe benefit. And then when you come back and produce what? Evidence of what you spent the money on. Like for instance, you say, like, okay, fine, you gave me 7,000 Rand, here's 2,500 for accommodation, here's 2.5 for food and whatnot. So that amount is normally included, all of it, as a fringe benefit. And then only then when you produce proof that, okay, well, you spent this and this and this and this on actually travel for work, then it's deducted. Then whatever's left, then it is the fringe benefit. So it is important that when you're calculating the pay as you earn that's supposed to be deducted from your salary, you sort of calculate the fringe benefit as well. It's not the only fringe benefit here, but if you want to know more about fringe benefits, please check out the other video that I've done, right? So, and then another thing is, okay, I've spoken about salaries, update your banking details, salary, as well as fringe benefits. Okay, take advantage of tax-free investments. I cannot emphasize this enough. Very, very important, guys. It's a new year, people are starting investments and whatnot, and savings and whatnot. The very first investment or savings that you must have is a tax-free savings. Before anything else, you must. The reason is simple, because it's tax-free. That should be reason enough. There is no other investment out there that you don't pay tax on, so you have to. Only then do you invest in other things when your tax-free investment is maxed up. At the moment, the maximum amount is 36,000. So only then, when it's maxed up, then you can start investing in other things. But then if it's not, please take advantage of that. It's very important. And also, speaking of tax-free investments, guys, rather than using it as a short-term savings, rather use it for a long-term savings. And the reason for that is because the benefit of the tax-free is much more when you use it as a long-term investment account rather than using it as a short-term. Also, equally important is you have a 500,000 Rand limit. So if you put in money and then you take it out and whatnot, you don't recover that 500,000 Rand. If you've used it, you've used it, even if you've since withdrawn the money. So we need to be careful with that and be smart about it. So take advantage of it, but also to use it the correct way. And also, if you've maxed yourself, you start using for your children. I'm sure they'll appreciate it when they're older and whatnot, and they have a nice tax-free investment sitting in their names. So that's just something. But also, please don't take this as advice. This is just general knowledge, and this is also my opinion. So please don't take it as advice. Maybe I should have done I should have. I think I'll write a disclaimer or something. Don't take this as advice, guys. I can only advise you when we do a one-on-one thing, and you pay me and I give you a service. But anyway, yeah, so don't take this as advice. It's just general knowledge. Like I said, I try to simplify text and I try to give tips, right? Okay, and then take advantage of pension fund, retirement annuity contributions and all of that. And the reason I'm saying that is because up to 350,000 of those you can claim as a deduction when you submit your income tax returns, which is nice, guys. So take advantage of that as well. If you want to save some more for retirement, then put those monies in those tax and increase your retirements and whatnot, and take advantage of that as well. It's a very nice deduction that you can get from that. Again, with those ones, even though the limit per year that you can deduct is 350,000 rand, if you are over that amount, you actually can roll over what's the amount that you didn't use, which is the deduction that you couldn't deduct. You can actually roll over to the following year, which is nice. So please take advantage of that. Then another important one, please guys, check your statements. SARS, they make mistakes as well. In as much as things are mostly done on e-filing, they're automatic and whatnot, but somewhere, somehow, there is a human hand there, typing things, putting these things in and whatnot, and mistakes happen. The kind of mistakes I'm talking about here is, for instance, last year, I don't know if you guys would have heard or would have noticed, there was a time whereby SARS just gave everyone penalties. It was like being at Oprah, penalty for you, penalty for you, penalty for you, penalty for you. So just make sure that you check your statement, and the statement I'm talking about is your income tax statement. If you're registered for income tax, check also your provisional tax statement, very important if you're registered for provisional tax. And then also check your penalty statement. Like I said, last year SARS make a huge mistake when they just gave penalties to everyone, and they also did a press conference about it, that there was a mistake, blah 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 blah. So mistakes happen. So when things like that happen and you don't check your statement, then you'll find yourself with monies that are owing to SARS and you don't even know why. So check your statement regularly. Just check. Or you can at least do it in the beginning of the tax season, during submission season, and at the end, just to make sure that you and SARS are on the same page. Very important. So check those statements. SARS makes mistakes all the time. I'm still actually going to do a video whereby I talk about checking your assessment after you submit your return, because SARS, believe it or not, even though it's automatically calculated, they also make mistakes there. Find that maybe your deduction from the previous year for whatever didn't pull through and whatnot, not a whole lot of things. So mistakes happen. Check your statements. Very important. Okay, what is next? Okay, when you are doing your tax planning for this year, these are tax planning tips, right? Make sure you are looking at, even though you're planning for this year, make sure you are also considering long term. What do I mean by that? There's things like estate duty that you need to consider. And the reason I'm saying this is because if you don't think long term, in fact with anything guys, you always have to think long term. If you don't think long term, you'll find yourself paying millions and millions of rands worth of estate duty. And guys, one of the ways that you can do this is to go and actually see a financial planner or financial advisor, and you sit down with them and they look at your assets and they look at your liabilities and they look at your incomes and your expenses. You do a proper financial plan. Most of the times that also includes your estate duty. Very, very important. This also happens when you actually are doing your will. Your fiduciary specialist should actually touch on estate planning when you are doing your will. Very, very important. And the reason I'm saying this is because most of the times, by the time you're older, it's too late. Not too late per se, but it becomes very difficult and expensive to start with your estate planning at that stage. Things, for instance, that you can do for now, if you can see that, okay, you have certain assets with you that shouldn't be with you. Like most, guys, that most of the assets that are growing, they're not supposed to be under your name, right? Like property. Try by all means not to have property under your name. It should be under a business or under a trust, not your name though. And the reason for that, obviously, estate duty. you pay a lot of estate duty. So try by all means to, if for instance you have assets that are under your name, speak to a financial planner. There are so many ways that you can plan your estate in such a way that you pay as little estate duty as possible. And for those who don't know what estate duty is another form of tax that you pay when you are dead. So I'm sorry to put it like that, but it's basically, that's what it is. It's tax on after death. I've done a separate video on estate duty. Please check it out if you want to understand more about it, or how you can plan for it and whatnot. So very important, guys. Just make sure that you plan, and also look at the long-term part of it. And then what else? I'm almost done. Oh, last but not least, I've been saying this in all my other points: consult a professional. Very important. Be it a financial planner, tax consultant. Just make sure, if you're going to consult a lawyer, please make sure it's someone that also has a tax background. Most lawyers now actually do both tax, especially those that are involved in estate planning and whatnot. They actually do tax. So just make sure that, in fact, just make sure that it's someone that has a tax background if you're going to be planning everything with them, including your estate and whatnot, and or if it's your lawyer doesn't have a tax background, at least have a tax professional or a financial planner. But there must be someone there who knows the ins and outs of tax, because then, I mean, what is financial planning, what is estate planning without a tax professional? So that's very important. Okay guys, if you listened up until this part of the video, please, if you find this information valuable, do subscribe, do share this information, and also click the like button. Otherwise, thank you so much, and I hope you learned something.